Hey traders, it's Victoria from TRADEPRO Academy, and in today's video, we're going to be talking about how to actually identify futures order flow the right way. What I think is the most valid and what would be the most valid for any futures trade to learn from the get-go. So hit that like button, hit that subscribe button, and let's ride through this intro and get to this video. If you don't understand how the DOM works, I think other order flow tools become a little less valid and you won't understand them as deeply as if you first understand and really break down the DOM. So I'm going to be showing you bits and pieces, right? A little intro here and there on the footprint and delta, but we're going to focus mainly on the DOM in this video. Now, in order to do that, we are going to have to jump over to a computer so we can show you what we're looking at. Hello, we've now jumped onto the screen here onto the computer, and we're going to take a look at, as you can see, a footprint chart here on my screen, along with the other components of the order flow tools that we had been talking about. So we're going to go through a footprint, like a delta chart. You can see the deltas on the side of this footprint chart right here, right? We can take a look at another portion of it as well. And we're finally going to wrap it up with the DOM and the key areas of the DOM and some of the things that you do need to understand from the DOM, which is going to be a little more intense, right? We're going to spend a lot more time on the DOM rather than the footprint and the delta for a specific reason, and you'll see why as we get through this video. So the key things that we do have to understand about the footprint, we're going to talk about the footprint chart correctly. And there are other videos for that we have in depth on the footprint, so I'm not going to go through it too much. But you can see that on the footprint, this is a 20 tick footprint. So every 5 points on the range bar, you are going to create a new candle. Now, I'm going to break down some of these components of the footprint, and this is a direction-based chart. So like I said, each candle is not time-based. It is based on the actual tick movement of the chart. Now, the few following components of the footprint, you can see the volume. There's like a little volume profile here on the footprint. That's pretty cool. But the main components on the footprint are going to be the imbalances, right? These are very similar to large market orders that come into the market that can be identified as aggressive buying or selling. Now, you can see on the buy side here, technically you're on the offer side because when you do hit a market order on the buy side, it does come from lifting an offer. And the same thing here on the sell side, it does come from hitting the bid. That is why it's on the bid side on the sell and the buy side on the offer. Now, these areas, they show us where there are strong buyers or strong sellers, quote unquote, right? They're areas where you can find inflection points, but it's not as easy as seeing a big buy or a big sell, for example. Now, I use this footprint chart in relation with a 10-tick chart and other things, but like I said, just because you see a massive sell imbalance, just like the one that you see here, right, 60 and 306 stack, that doesn't mean that the market is going to drop down, right? We talked about the volume profile in some other videos, and this zone right here comes from the volume profile as the bottom end of a distribution in and around 04 and 05, with the expectation that price is going to hold and push to the upside. So these imbalances, right, they're used to see what the reaction of the market is when an imbalance like this is printed. Now, this is a interpretation of what you could see generally on the DOM. So when you're looking at balances and imbalances like these, you're looking for ideally larger size, a few rotations, multiple balances that stack one on top of the other in the directionality of the trade, so you can identify a potential move, a potential inflection point. Now, these imbalances can also be seen as stuck traders in this scenario, where you can see big sellers come through. They fail to push down with a buyer that comes in, a strong buyer, turning this market around. Very similarly here, you see multiple stacks of buyers which attempt to propel the upside before some sellers come in. Now, if you take a look at this portion on the footprint, right, it looks kind of confusing at some points because, again, you have massive sellers here and then you have a big buyer, then it turns around. Now, if you take a look at this portion on the DOM, you're actually going to see how the sellers right here get actually stuck short before buyers do step into this market. Now, if we correlate that with a general 10-tick chart here, we can see that in that specific area, right, at the beginning of this day, we can see that we actually have a bottom end of a distribution block, right? This is the bottom end of a larger distribution that shapes up from 4105 all the way up to 4160, 65, right? You can take a look at that on a general volume profile chart, right? If we pull this guy across from trading view, you can see where this large distribution shapes up, right around here. And this is going to be the bottom end of that distribution. So it's not just the footprint that we have to look at, right? It's a combination of the footprint with a few other things. So this guy comes in here, and what we see on the footprint in that case is a stuck short seller that comes in and rejects with a nice buyer that pushes the market up. So with the footprint, it is based on the reactivity of these market imbalances that come in, right? The key here is if you want to really focus on the footprint, you want to see multiple rotations of potential buyers that come in at these lows that actually propel prices higher if you're going to find something that is a little more confidence inspiring for those buyers, and the same thing for those sellers. If we take a look at a different chart here, we're coming into a key resistance point, and again, we're focusing on some stuck sellers. This massive resistance point in and around 30, right? What had happened in this area, you pop up and there's no real imbalanced buyers with a very strong wick on this candle. You can see this is the body of the candle. This is the wick of the candle. Now, instead of this thing being very bullish as we pop above, you can see that when we drop down, notice these big market imbalance buyers come in at the top of this range only to fail. Right? This is presenting stuck long traders on this footprint, right? They cannot absorb to the upside. And what's happening here is that they're actually getting pressed down. Each time market buyers come into the market, the price drops. Eventually, what happens is you get a massive short that does pull that market down. And until that guy comes in, it is a little harder to identify where the next directional move may come with all these buyers. And what I mean by that is if you look at the DOM, you'll see that real time shaping up and the reactivity of those traders shaping up more so than you would on this footprint, right? The footprint sellers, they come in a little later than we would have liked after all these stuck longs get jammed. Now, it's still a very good chart, I would say, to kind of use that conviction, but I would focus a little more on the DOM plus the footprint rather than just looking at this footprint alone. Because if you're looking at this from just a general perspective without looking at any reactions, you see buy side, and you're thinking, well, this thing has to go up and break back above these levels. But you start adding other qualifiers and starting to think about this a little more logically, you can see that there is no buy side aggressively on this candle that wicks down. And then you get a stuck long with a reactive push on this candle that actually drops. This guy pops back up. You get another stuck long. Sellers come down, and that is the point where prices get hammered. Now, you could add to this order flow tool the delta. This is going to be a delta reading here as a histogram, like a volume profile type chart. The delta is the net change in contracts of the bid and ask, right, on a volume scale. So that would mean that at this certain area, there might be X amount of buyers, right? There's going to be, let's say, 1,000 on the bid side. And then on the offer side, there's going to be 1,021. When you net this out, that is going to be the net delta at that position, meaning that there are 291 sellers net at that positioning. So with these buyers and sellers on the delta, they're going to net out the volume. This volume profile is very similar to what I'm going to show you on the DOM itself, where we look at the bid and ask profile. So these delta bars, they can identify the strength in sellers. They can identify stuck sellers. They can identify the strength in buyers, and they can identify the stuck buyers, right? So if there is more bid than the offer, you're going to see a negative delta. If there is more offer than the bid, right, you're going to see a positive delta. And I'm going to explain exactly why. Because again, when you lift an offer, what happens in the price is you hit a market buy. When you hit the bid, what happens is going to be a market sell. So if we dive into this delta just a bit more, we can look at these areas as key resistance points, right? You can see how much negative delta is shaping up. Now, if you add that to the footprint that we had just talked about, when you have massive negative delta in this region, right, in these 29s, 27s, and you have a massive negative delta region right here, with these buyers coming in and getting stuck and this massive delta, this is going to be a huge resistance point where we're going to be looking for that flush to the downside. Now, it also works in different ways too. When these massive sellers actually get squeezed, right? When you move above them, you're going to see a large extension to the upside. You could also look at these, and if they're at the bottom of a structure, a bottom of rotations, these are going to be stuck shorts that are getting accumulated and might get pushed away. So if we look at this chart with a 10 tick instead of the footprint, and we look at the delta here on the sidelines, we can see where the massive negative delta region sticks around, where we have this massive resistance in this market, right? You have some few positive delta readings here, and then obviously you have a massive short delta position that sticks out right here. And this is what I mean, where you have these stuck shorts that can present a upside opportunity. So the point with delta here, you're trying to find out the areas where you find a lot of positioning that really sticks out, whether it's negative or positive delta, that really jumps out at you on the volume profile. And those areas are going to be support resistance areas, and they work in pretty much any way, right? If there's stuck shorts at a low, if there's stuck longs at a top, if there's strong longs at a bottom, if there's strong shorts at a top, they can all work in different ways of support resistance. So ideally, when you have stuck shorts at a low, you have a massive accumulation of negative delta at key support zones where price might bounce up. Now, it's not enough to just see this and say, oh, okay, well, there's some massive stuck shorts there. Let's just flip to the long side here. When you look at a DOM, it shows you where those reactive buys are that help you analyze that these are actually stuck short deltas. The same thing at a top. You can have strong short deltas at a key resistance. Now, the difference between this obviously is location, because if you look at this and you say, well, they're both huge negative deltas, how the hell do you differentiate between long and short? Well, at key resistances, if you have massive short delta, right, you're looking at a DOM specifically, even rotations on a 10-tick chart, and you're thinking, okay, well, if they keep reoffering and selling these areas, this becomes a region where they're expecting to hold out for that next short side swing. So that's why I wanted to show you delta and the footprint before I look at the DOM with you guys, because you'll see that, yes, they are powerful tools. They're great order flow tools. But if you look at the originator, which is the DOM, you're going to see more information, right? You're going to see how these buyers and sellers actually come through the market, how they create the footprint and the delta. And from that, you can use that information to kind of help you understand what the delta and the footprint actually mean. So these are just other partial qualifiers that do come from the DOM, and the DOM being the originator of the order flow tools. So right now, I do want to look at the DOM and understand the DOM a little more, because it's going to show us more of why this happens and what is going on, and with which columns and what areas of the DOM to focus on. So why don't we open up a DOM and do just that? So if we take a look at the DOM here very thoroughly, we can see that on the DOM, we have multiple different columns setting up. Right, you can see that there are a lot of different columns here on this DOM. So let's go through these very quickly. I think we've talked about these before, but we're going to be talking about how these columns interact and what areas of these columns you should be focused on. So quickly here, we have the volume profile, two sets of volume profile. One is a day session, one's a cumulative based on the overnight and the day session. So these volume profiles tend to work just like a regular volume profile chart. You're looking at distribution blocks, you're looking at ledges, and these do help you understand where you could be looking to get into positions. For example, you have a big ledge here on this distribution block in and around that 31, right? That 31 holding out, you can see how many times we do hold out that 31. It's a massive ledge. You're looking at what the positioning on this area is based on buyers and sellers. Now, the bottom end of that distribution block, as you'll see, surprise, surprise, it is close to 19, which shapes up 1918, which shapes up the lows, where we held this distribution very well over the last few rotations, right? You can see where this shaves off where that ledge is. And ideally, you can see some buy pressure that comes in and pushes us through. The other portions of the DOM naturally are the price here, right? The price is kind of arbitrary. That's why I cut off the first two numbers. Whatever the price is, it's fine. And then we have the bid and ask columns here. The bid and ask columns are areas where you put limit orders. People put limit orders on the bid and ask, and a lot of people do put a lot of emphasis on these bid and ask columns, thinking that those limit orders are going to present us with directionality, with the potential of movement, with all that good stuff. In reality, those are just limit orders. Until they become market orders, they're not that important. Now, there are a few cases where those limit orders might have some kind of influence, and that again is only when they get filled. Now, speaking of getting filled and market orders, we're going to look at these two middle columns right here, which is the last traded quantity on the ladder. Now, a thing with these last traded quantities is that you need to have the right settings before we talk about these a little more. You have to have the right settings. So when we go into the chart DOM settings, you're going to want to scroll down here into the recent bid and ask volume timeout in milliseconds. If you have it set at 0, you're not going to see the contracts accumulate. Instead, they're just going to brush by the first trade, maybe 5-6 contracts you see in these middle columns, and they're going to reload. So if you have something like 2,500 milliseconds timeout, you're going to see more data. So make sure you use that and change these settings. But these middle columns right here, we have them set up as the areas where you have market trades. So this is the base and origination of the footprint, where these footprint numbers come from. And you can see them real time and how they adjust and what they do, instead of just having one imbalance on the footprint. Right here in red, what we have is market sell, right? Because when you hit a bid, right, it becomes a market sell order. Right here in blue, you have the market buy, because when you lift offers, these become market buy areas. So keep that in mind. Now, the final portion of the DOM that I do want to show you here is going to be the bid and ask volume, right? The bid and ask volume is the originator of where the delta comes, because when you subtract these, right, areas, you're going to get a net delta positioning, and that's going to be very important, right? But when you look at these, you can identify the differences in the bid and ask volume, and you can see where there's strong longs versus strong shorts, or stuck shorts versus stuck longs. So for example, if we zoom down here into the 04 area, right, this is pretty much the low of the day, the 04. And then you can see right here, right, you have a massive 1,213 buy side order, right? You're not seeing many stuck shorts in this area, but when you see that massive buy side order that flushes price up, what you're getting is a huge support structure that is expected to hold prices out. That is what we call a strong long. Now, on the other side of things, let's say, for example, over here at 05 quarter, instead of this being 300, right, you're comparing these side by side. You can compare them like diagonally as well, or sorry, diagonally like this way. But if we compare them side by side, right, let's say over here, we have two areas. Instead, they were 300. Let's imagine that these were 2,300 on the short side compared to very little buy volume. If this was the case, this is what a stuck short would look like on this DOM. And on the net delta, you'd have a very long extended red line down here that sticks out and might have maybe 2,000 negative delta, which is the epitome of a stuck short. So these are the main columns that you're looking at on this DOM. And if we want to talk about this DOM a little more, understand how this DOM works a little more, number one, we're going to be doing a whole separate video on that, how to find entries on the DOM. But number two, there's a few concepts that we do want to identify here, right? We do want to identify how the DOM is useful to identify directionality, what we have to look for, right? How is the DOM useful to identify potential inflection points, right? And then we can also look at the DOM to identify how strength comes in, right? How weakness comes in, and a lot of those other things. So that being said, we're going to have to focus on these middle columns on the DOM. This is going to be the main point of contact. Why not the bid and the ask? Because again, these are going to be limit orders. Even if there's a big guy sitting here, let's say he's 200, he does not become important to me or very impressive until he fills, and then you see the reactivity of the DOM. So the DOM, just like the footprint, is based on reactions. Because if you get a lot of shorts at a low, right, that doesn't mean you have to drop down. If you get a lot of shorts at a low, just like you've seen here at these 06, 05 regions, the question is, how do they react? Do they downtick the market, or do they get swung back up and open the gates for some buyers to come in? Right? That's going to be the important aspect of this DOM. It's always going to be about reactivity. Now, the DOM is useful to help us identify what the directionality of the market is. For example, at this low right here, you can see that there's a lot of big numbers. when you're looking at a DOM, you want to be focused on larger orders, right? 150, 200 plus, right? Those are going to be very impressive. You don't want to be focused too much on these little fish unless they have some kind of reactivity to them. Now, if we just focus, right, the basics, the beginner basics on the larger numbers, and we keep in mind what the reactivity is going to look like on these middle columns of the DOM, we can identify what the directionality of a market is going to be. So, for example, a bullish market, we focus a lot on the buy side of the column, right? We do focus on the sell side as well because we have to understand what the reactivity of this DOM is. A bullish market would consistently see rebidding of larger orders, right? Larger orders that want to keep buying higher and higher, right? That sustain this upside swing. Now, that doesn't mean that some kind of reactive shorts might come in, right? Larger shorts, maybe 100, 110. But the key is they cannot really push price down too much. If you're going 577, 104, 144, 234, 141 market buy continuously, right? If the sellers come in 110, you want to see them maybe drop a point, let it rebid again, and that is going to be a bullish DOM. It's the same thing for a bearish DOM as well, right? The bearish DOM, you just flip it around and you're focused on how these guys continue to sell. Now, to add to this, right, you can look at key inflection points that you get from the volume profile. So if I have a volume profile area that tells me that this is a key distribution low, I want to be very, very focused on what the market is telling me, market orders in this area, right? I want to understand what the market orders are in this area. So if we watch how the DOM reacts, yes, there is large selling. You can see there's 352, there's 427, 253, right? Large sellers do come in at this market. But at a certain point, they start to diminish and there's no longer large sellers. Right. At a certain point with these large sellers, they might keep coming in, but you want to see how the DOM reacts. If large sellers do keep coming in, but price is not going anywhere and even upticks, that is a welcome signal for an inflection point for the market to turn around. And right, the key component here is not only shorts being weak or shorts getting stuck, but for a long, you need to have market buyers. So the market buyers first come out 377 and they pop it. And then they come out two levels at over 200, massive long at 577, sitting at 6/4 right here. That opens up the book for this 1213 long that pumps price up, right? Right at this area, this key inflection, that's exactly what happens. And these are the areas you want to focus on to get in on the long side. So these sellers come in, they can't push price lower anymore. They get a reactive buy. Every time they pop it up, these guys buy more, they buy more, they buy more. And that is going to be the turning point for the DOM to actually propel to the upside. Now, that's only one point, right? You would need to see them continuously buy and go rebid if this thing is going to continue to climb, right? Very, very simple in that case. Now, there's another thing. If there was a massive stuck short here, that would be a huge number on the bid volume side, right? He'd be massively stuck, let's say 1200 at the lows. Now, it's all about reactivity because if you short 1200, the expectation is for the market to go down. If they reoffer and the market slips, that's great. That's a real strong short. However, if they have 1200 short side at this low and you get a massive rebid of like maybe even 500, 400 at a few levels, and the market upticks, that is what accumulates a stuck short and convinces us that there are actual market buyers in this to propel prices higher, right? So that is what needs to happen if there's going to be a directional move, whether it's a short as well. If there's a real short, you have to have a massive offer, even if there's stuck longs or weak longs, you have to have a massive reoffer for price to go lower, right? Keep that in mind. Now, with this DOM, there's a lot of different tools. There's a lot of different ways to see these patterns. But if you focus on how markets rebid versus reoffer at key areas and what the reactions are, it will take time. It's going to take a lot of screen time, but you're going to learn how order flow actually does work. Now, one of the main concepts with the bid and the offer here, these limit orders, is that you can find market absorption that actually creates stuck shorts. So for example, one of the best strategies is the stuck short strategy, right? We'll cover this in a different video, but if you're looking at the bid and you see a massive bid, maybe 200 sitting at a limit order, it's not that impressive. But when he fills, and let's say the whole 200 fills, right, that becomes a strong market short. Now, the idea is, how do we react from that area? Maybe they add another 200. Now 400 have filled at that area. If they fail to drop and you get a rebid, that is how the stuck short accumulates, and you're expecting that pop. So with the DOM and all these market orders, the two main columns are going to be the most significant. And watching how they interact with the volume profile levels and interact with one or the other is going to help you understand how to actually follow direction and order flow in the market. And it's going to help you understand the footprint and delta and how they shape up, and using those for other qualifiers, right? Extended qualifiers to help you out in your futures journey. So this was a fairly thorough from beginner to a little more intermediary on the DOM. And we're going to make continuous videos on this DOM and how these DOMs work and how they interact with levels in following videos. So we're going to be taking a look at how to use the DOM for entries, and we're going to be taking a look at one specific strategy used with the DOM and how to follow the orders in the DOM. So I hope you guys really enjoyed this order flow basic video, right? How to correctly identify order flow to trade futures, and introduction to the DOM, footprint, and delta, and what they specifically mean. And I hope you got a lot of information from this DOM and how it generally works. Now, in subsequent videos, we are going to look at how these actually trade within, what to look for, how the reactivity happens. But until then, I hope you guys really enjoyed this video, and let's jump into the outro. I hope you guys enjoyed all that futures order flow stuff that we had for you, and mainly focusing on the DOM, right? We beat that horse to death. So let me know down below in the comment section, did you enjoy the DOM aspect of it? Are you more interested in the footprint or delta? Which order flow tool did you like the best? So I hope I gave you a chance to identify what order flow tool you gravitate towards, and the importance of actually learning how to use the DOM effectively. It is the cornerstone after all. So this was trading with order flow the right way in the futures market. Now I hope you guys enjoyed this video. And again, drop a comment, hit that like button, hit that subscribe button, and we'll see you next time. This was Victoria from TRADEPRO Academy.